Hello traders. Today is the 25th of August 2011. Okay, and for those of you who are new to us, we are the TSTW 24 traders. Our website is www.stochastic-markd.com. For all trade, we will use the 5% money management rules and apply your stop loss in all trade. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. Okay, we are looking at the monthly chart of the dollar-yen currency pair. Okay, a few months ago we have posted a video on our channel www.youtube.com/Trio, and we were counting the wave. We count first wave, second wave, third wave, fourth wave, and fifth wave right here. And we were expecting the ABC corrective move, okay, to continue, okay, but I told you also that the fundamentals, okay, talking about the trading triangle, we will pay attention first to the market, then the sector, then the individual financial instrument, the heart of the trading triangle, the news, okay, the leaders, and the fundamentals. As we have seen recently, the job creation in the United States has been very, very poor. Talking about the non-farm payroll, the unemployment claims, okay, these figures were very, very, okay, disappointing. So therefore, the dollar-yen continuing the movement to the downside, okay. So talking about technical analysis, we must combine the technical analysis with the fundamental, very important. So if you are just paying attention to the technical, making your decision based on technical alone, that's not the right way to do it. You must combine the technical and the fundamental, and this has been very true for the dollar-yen currency pair. As the fundamental remain very weak, the dollar-yen continue the movement to the downside. Okay, so now we have a different picture here. Okay, we will count our wave again here. You can see that the price was bumping between two levels here. Okay, so we break this support level. So the price was between this level here when I place my cursor and this level here, and it break out. This is the first Elliott wave from here down to this level here. First Elliott wave. To master the subject of Elliott wave, you can go to www.24elliottwaves.com. Okay, so the second Elliott wave from here all the way up to here, and then we have the third Elliott wave from this level here when I place my cursor up to this level here. In this case, we are dealing with the complex third Elliott wave, which has been divided into 5 small waves. First small wave within the third Elliott wave, second small wave within the third Elliott wave, okay, third small wave within the third Elliott wave, fourth small wave within the third Elliott wave, and the fifth small wave within the third Elliott wave. From this level here down to this level here, this is the third Elliott wave. And then we have again, okay, the fourth Elliott wave from this level here up to this level here where I'm moving my cursor. So from here to this level here, that's the fourth Elliott wave. And then we have the fifth Elliott wave from here to this level here. You can understand that when you are counting a wave, you are counting a wave as the price is progressing. Okay, so if the fundamentals are changing, if the price is moving, you must reconsider the new picture that the price is displaying in front of you. Very important. As we were here before, we thought that we were at the end of the fifth Elliott wave, counting a wave, first wave, second wave, third wave, fourth wave, fifth wave, but the fundamentals were changing, which means the price, instead of displaying in the A, B, C corrective move, the fundamental has changed the music, so to speak, and we have a downtrend continuing to the downside. Okay, this was happened. Okay, so we have now counted 5 waves. First wave, second wave, third wave from here all the way here, which has been divided into 5 small waves, talking about the complex Elliott wave, and then from here up to this level here, the fourth Elliott wave, and from this level here down to this level, the fifth Elliott wave. Tomorrow at 10 a.m. Eastern Time. Okay, this is my YouTube account. Okay, I'm in the wrong place, forgive me. At 10 a.m. Eastern Time, okay, on Friday, 26th of August 2011, okay, at 10 a.m. Eastern Time, which is 3 p.m. London time. Fed Chairman Mr. Bernanke will be speaking, okay, a very important speech by Mr. Bernanke, okay, that will decide, okay, the next move of the dollar, okay. So if the Fed speech has been bearish for the dollar, which means if the Fed starts speaking about stimulus for the economy, if the Fed starts speaking about the QE3, quantitative easing number 3, the stock markets will go up, which means stock will go up big time, okay. In fact, if the Fed is talking about more, okay, stimulus, is talking about QE3, we will be busy looking for stocks to buy. That's what we will do, okay. But on the other hand, if the Fed say 9, okay, which means no in German, say that there will be no more stimulus, no more quantitative easing. That's what myself I prefer Mr. Bernanke to say tomorrow. We will expect the stock market to go down, okay. The S&P 500 going down, the Dow Jones going down, the FTSE 100 going down, stock going down. That will be the normal progression of the market, because any intervention by QE3 or quantitative easing number 1, number 2, number 3 is a kind of a legal market manipulation. As we have seen in 2009, the market must display on the weekly chart for the Dow a double bottom pattern. Due to the quantitative easing, which means the Fed pumping money into the market, the Dow, okay, has started a new uptrend since 2009, and that has lasted for 2 years. Same thing for the S&P 500, same thing for the Nasdaq, same thing for all the major indices. Now we are expecting Mr. Bernanke to leave the market alone. No more QE3, no more stimulus for the market. The market will rectify itself. Repeat, the market always, okay, correct itself. You do not need to control it. You do not need to manipulate. You do not need to intervene. The market will rectify itself. The main thing that Mr. Bernanke should focus on is about job creation. If there is no job creation, people cannot consume. There is no prosperity. The job creation is the key. So we will be watching carefully the speech of Mr. Bernanke tomorrow at 10 a.m. Eastern Time. This is about the blah 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 blah, talking about the fundamental, the news, and the leaders. Okay, so we are now here talking about the fifth Elliott wave. If tomorrow Mr. Bernanke starts speaking about stimulus, start talking about quantitative easing, talking about more intervention into the market, we will see the dollar yen continue the movement to the downside, which means we have to do another video to explain the new dimension of this currency pair. As I told you before, the dollar yen currency pair is a very excellent market indicator. That's why I constantly pay attention to the dollar yen, because it's a very excellent market indicator. In normal condition, if the dollar yen is going down, the market should go up. That's the theory. The theory is different from the reality of the market. So we have 5 Elliott wave. What we will expect the Fed to do is to be bearish. Okay, the Fed to not to be bearish, but the Fed to be bearish towards the market, which means no quantitative easing, no stimulus. Okay, but a different action in the market, leaving the market alone to heal itself, so to speak. So we will see the Dow going down, the S&P 500 going down. People will start making all sorts of noise, but as I told you before, this is a very healthy thing for the market to give us on the weekly chart, the double bottom pattern. Very, very important. If we are delaying it, which means if tomorrow Mr. Bernanke talking about quantitative easing, stimulus, he is just delaying, the last move to the downside. The price at one point will return back on the weekly chart to display for us our double bottom pattern. the sooner we do it, the better. So leave it alone, let the market rectify itself, okay, which means stock market going down, people will be making all sort of noise, oh, stock market going down, so what? Let it go down, and then we will see by the end of autumn, we will be busy buying again, which means the market will give us our double bottom pattern, talking about the S&P 500, the Dow, on a weekly chart. This is very, very important. Do not force it. Do not manipulate it. If you do, you are just delaying it, okay, so to speak. So this is what we want. So if Bernanke did not talk about stimulus, if it did not talk about QE3, okay, we will see the dollar yen giving us the A corrective move, bringing the price up, okay. So we will see the A corrective move. We'll break this high here. I want to show you the high that I'm talking about here, this one here, at 8553, okay. So the A corrective move from this point should go up and break this high here. It must break it to be a proper A corrective move. So price going up to above the 8553, okay. So that will be very nice for us. We will be buying, because all I want to do is to buy the dollar yen. I'm not interested to sell it, okay. So buy, break this high here, okay, and then we want it to pull back again and retest this level here, okay, pull back a bit, go below it, okay. So going up to 8553 zone, okay, break above it, okay, crash back down a bit, okay, and give us a kind of double bottom pattern, which means the price breaking above the 8553 and then returning back below somewhere here in the zone of 8126. That will be perfect, and then zooming to the upside. So we want to see the A, B, C corrective move, bringing the price in the zone, talking about the full range of this downtrend from this level here all the way here. I will remove my previous Fibonacci levels, and I will draw a new one, okay. That will be from here all the way. Now for this software, it's a different way to draw it. So from this level here, okay, all the way up to this level here, okay. So the ABC corrective move will bring us in the zone of 50% and 61.8, talking about 9555 and the zone of 10000, okay. So we are talking about this level here, okay, of 9555, this level here, exact level is 9555, okay, up to the zone of 10016, call it 10016. That's between 50% and 61.8% Fibonacci retracement level on this monthly chart, okay. That remains to be seen though, talking about the ABC corrective move. The A corrective move must break this high here, okay, this high here, right here, where I place my red horizontal line, and give a pullback a bit before returning into the upside in the zone of 50% and the 61.8% Fibonacci retracement level for the whole downtrend that has begun from the first Elliott wave up to the fifth Elliott wave. But as I told you before, this is a technical analysis. Tomorrow Mr. Bernanke will speak, paying attention to the trading triangle, the heart of the trading triangle, the news, the fundamental. Some traders are very technical, especially the new traders. Myself, I was that down, and they don't want to know anything about the fundamental. But I'm encouraging you, okay. So start building the best habits, paying attention to the fundamental. Tomorrow, watch it at 10 a.m. Mr. Bernanke will be speaking. What I have said tonight, okay, just take note of it. Remember that tomorrow, if Mr. Bernanke wants, he can perfectly push the dollar yen down, okay, push it down. If he start talking about stimulus, if he start talking about quantitative easing, we will see the dollar yen going down and the stock market going up, okay, in normal condition. Now, suppose Mr. Bernanke did not talk about stimulus, okay, tomorrow, okay, and he did not talk about quantitative easing, okay, which means everything is remaining intact for us. Dollar yen start going up, okay. We were expecting the ABC corrective move. Now, do not try to force the ABC corrective move on the price. The price, the number one indicator, which means dollar start going up, okay. Next Thursday, we will pay attention to the, okay, this one here, I want to show you. We will pay attention again to the job creation, okay, unemployment claim every Thursday, okay. Today, It was a very bearish unemployment came. Okay, here you see the red one here. Okay, 417K. Okay, that's 5,000 more unemployed people. Okay, right here. Okay, you see, last time was a 412,000. This time it's a 417. The number of people unemployed has been increasing. You see, so we want to see this going down. In fact, okay, we want to see a job creation. That's very important. So remember the technical and the fundamental. So as the price going up, we want to see also job creation improving. If it's not improving, all the blah 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 regarding Elliott wave and the price going up, it's just not going to work. It's not going to work because the fundamental must support, okay, the technical. We must combine. There must be agreement between the technical and the fundamental. Yes, this is the best place for the dollar yen to resume, okay, the uptrend, okay, displaying the ABC corrective move, bringing the price to this zone. That's the technical, that's the theory regarding the Elliott wave. Now, the next thing is the trading triangle, the fundamental, the news, and the leaders. Tomorrow, Mr. Bernanke will give us a bit of idea what will happen. As I told you, Mr. Bernanke tomorrow can change the dynamics of the market. The trading triangle, the heart of the trading triangle, the news, the fundamental, okay, very, very important. The news, the fundamentals, okay, and the leaders, okay, very important. So 5 Elliott wave, this is what we have. Now the next thing I want you to pay attention to, talking about a critical price level for the dollar yen, we'll quickly go to the yearly chart, okay. The first critical price level for the dollar yen, CPL1, is at 9295. CPL2 is at critical price level number 2 is at 8113. Critical price level number 3, CPL3, is at 9499. CPL4, critical price level number 4, is at 8024. Critical price level number 5, CPL5, is at 8133. And the smart media line for the dollar yen currency pair, note it down, okay, is at let me check my notes here, is at 10004. 10004. As you have noticed, like I did before in the previous video, because the price has created a new smart low, we have a new, okay, smart media line. This is what we are talking about, the dynamic smart media line, which means we have a root smart media line. Now we have a new smart media line, okay, because the smart low has changed. The smart high remains intact, which is right here. The smart high is at 12413, but the smart low has changed, which means the price has the range of this 5-year candle has changed. Therefore, the smart media line has changed too, because we have a new smart low. The current smart low, okay, the current smart low is at 7595. If tomorrow Mr. Bernanke decided to push the dollar to the downside, we will have a new smart low, which means we will recalculate again our smart media line, having a new dynamic smart media line. This is about the smart media line. If you want to know more about the smart media line, you may perfectly go to our YouTube channel, www.youtube.com/.3o, to check our videos regarding the smart media line. This is very important subject. Talking about Fibonacci, we will go quickly to the monthly chart. I'm speaking very fast, forgive me, because I'm watching the time, because I don't want the video to be too long. Okay, we want to draw the Fibonacci levels. Okay, for I want to remove some lines here. Okay, so in fact I'll remove all lines. Okay, I'll remove all lines. Okay, so you see that the price went down from this level here all the way here. Okay, and then retrace up to this level here. We want to know how much. That's a 50% Fibonacci retracement level, okay, for the movement from here. You see, we are at a 50% zone. See, okay, this is very important. And then we will draw all our Fibonacci projection level, all of them, 127, okay, 161%, 138, 214, 238, 261, 314, 361, 423, all of them. Do not gamble with the Fibonacci level, just draw them and pay attention to the activity of the price in the Fibonacci levels. Okay, very important. That's all you do. You just draw them, because these are hidden support and resistance level. So you want to know where they are. That's the purpose of it. That's it. And then you pay attention to the price. That's all. Okay, but I want you to pay attention to two levels: the 161% Fibonacci projection level or Fibonacci extension level. 161% is at 7875. 7875. Okay, 7875. Okay, 7875 is 7875. Okay, is somewhere here. Okay, that's the line I draw here. Okay, 7875, and also the 176% Fibonacci retracement level is at 74. Okay, 54. 74. 7454. 7454 is somewhere in this region. Okay, this is the line I draw here. So pay attention to the line here. That's the 161% Fibonacci extension level. The one below here is the 176% Fibonacci retracement level. We are between the 161% Fibonacci extension level and the 176% Fibonacci extension level. Watch it. This is another important level that you may pay attention to, talking about the Fibonacci projection level. We are between the 161% and the 176%. Quickly, if you want to take note, the 214% is at a 6386. The 238% is at a 5712. The 261% is at a 5065, and the 314% is at a 3576. Okay, so 161% is at 7875, 176% is at 7454, the 214% is at 6386, the 238% is at a 5712, the 261% is at 5065, and the 314% is at 3576. Two levels before I close this video. Pay attention to the two levels that I'm going to talk about now. The 7100, 7100, okay, and the 4800, 7100, and the 4800. If Mr. Bernanke decided to push the dollar down, the price will continue down into the zone of 7100. If he breaks below the 7100 and fail to find a support below the 7100, you may continue the movement to the downside up to the 4800 that remain to be seen. If for one reason or another we go below the 4800, that will be the end of the dollar that remain to be seen. This is a technical analysis, not a magical analysis. Okay, very important. Okay, the next thing that we must pay attention to, talking about the dollar yen, okay, the small median line, as I told you, is at a 100, okay, 04, somewhere here. We will pay attention to the abnormal candle, as I told you before, the candle that is oversized, bigger candle within the 5 range candle, this one here. The median line for the year 2008 is right below the small median line. Okay, the median line for 2008 is at 9985. Ladies and gentlemen, this is a technical analysis. Okay, we must combine the technical analysis with the fundamental, paying attention to the news, okay, and the market leaders. Okay, so tomorrow we will be watching carefully, paying attention to what Mr. Bernanke will say at 10 a.m. Eastern Time, okay, 3 p.m. London time tomorrow, very important. That will decide the future of the dollar yen. Okay, right now we have counted 5 Elliott wave on this monthly chart. Okay, first wave, second wave, third wave from here all the way down to this level here, and the fourth wave and the fifth wave. In this case, we have a complex third Elliott wave. We will see a decision regarding the fundamental. The fundamental can change the dynamics of the technical, as we will see tomorrow what Mr. Bernanke will say about stimulus and quantitative easing. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders.